Investing in commercial real estate in expectation of a return in the form of high rents comes with a very high entry barrier because you need huge capital to be able to purchase or acquire that property, which is where REITs come in. REITs stand for Real Estate Investment Trusts. These are professionally managed trusts which pool money from various investors or unit holders and then invest them across commercial real estate properties across the country. They're required to be registered with SEBI. They come out with IPOs, and the stocks, the units are also traded in the secondary market. Know that SEBI regulates that they should not invest in properties outside of India. So they're investing in prime real estate properties across the country. Think something like a BKC in Bombay. Now, how do you decide between whether you need to invest in a REIT or should you really buy a real estate developer stocks, maybe like a DLF or a Unitech or some such? REITs are mandatorily required to invest minimum 80% of their total pool in completed properties so that a rent can be expected on it. There is also a cap of 10 to 20% on how much they can really put in under construction properties. They're also not allowed to put money in vacant land, in agricultural land. So there are those restrictions. Over and above that, minimum 90% of the profit at the end of the year has to be distributed to the unit holders, which means that all the rent or interest it may really be earning during the year will come in the form of a return to the unit holders, which can be expected to be 5 to 6% depending on what kind of commercial properties they hold. You can also expect a capital gain on those properties, which could be a big consideration for a lot of investors. But know that real estate cycles can be well above 10 years. So you should only look at capital gains only if you have that kind of an investment horizon in mind. Now, what kind of REITs are available in India? There's one by Brookfield, second by Mindspace, there's a third by Embassy. Kotak Mahindra also has an international fund of funds, mutual fund kind of a REIT that they've set up. These are the options that you can invest in if you have a Demat account and you invest in stocks. You can buy these REITs. As I mentioned, they say that 5 to 6% return can come about and capital gains. What should you be looking at? What should be your further criteria in deciding which kind of REIT among these to invest money in? So study the kind of cities that they have their commercial property portfolio in, the kind of properties they are, the quality of these properties, read up about the promoter history, try and understand what kind of tenants are there in this property. Also try and figure out that these properties or these investments are well diversified. So it shouldn't be that the main chunk of the return is coming from just a few major players who've taken a huge chunk of these properties on rent. So it should be well diversified. There are enough number of tenants. Also look at the weighted average lease expiry, which means on an average, in how many years would the lease with these tenants be expiring? These are COVID times. There's a possibility companies may be thinking of not renewing their leases. So you should look at whether these companies will renew these leases in the future. Know that investing in real estate is not for everyone. So even though REITs may give you a low ticket size to enter into this investment class, but understand the duration for which you need to be invested if you want capital gains. Study the portfolio. Not everyone believes in investing in real estate as an asset class. Also looking at in the future how companies are moving towards work from home, but still real estate could also expect a boom. Just saying, be well informed, read more about it. I'll probably share 1 or 2 links in the description. You can go through it and share it with someone who may need it.